This is the London Fintech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman, and this is London Fintech Podcast, episode 106, brought to you in association with Blue Motor Finance, Capital.com, and Smart Pension. And I'm delighted to be joined today by Ivan Gowan, CEO of Capital.com. Capital.com have over $30 million of capital and have won a number of awards recently. The best trading platform in 2017, the most innovative broker of 2018, the most transparent brokerage service provider of 2018, and no doubt many more. As the smartest of you will have noticed, the name Capital.com has crept up several times already in the conversation. So I have the red carpet out today and I'll be super nice to Ivan. Or maybe I won't. Maybe I'll have to bowl him some extra short-pitch balls to demonstrate my editorial independence. Only time will tell. I recall in the early days of the podcast, a listener I met saying he loved the show, but why was I always doing episodes on P2P? To which my answer was that it was a hot area where things are really happening, and no doubt in time there'll be others. With a notable exception of Christian at LendInvest in LFP106, who, as he explained, are technically no longer a P2P in regulatory terms, these days it's a sector I don't cover often. Strangely, I don't get listeners asking me why not. However, the basic phenomena that new areas get hot, or is it cool, maybe hot and cool are the same thing, and at a certain stage hot to trot, we get the London bus phenomenon. One waits a while and then they come in twos. So, as I explained in the last episode, real disintermediation of online investment management is not to have it at all. In the last episode with Free Trade, we covered how you'll be able to simply buy, say, an ETF for zero cost from a digital, execution-only stockbroker. Do that and hold it a decade or two and see how that outperforms the guys and girls who put their money with online investment managers, charging them a fee getting on for 1% per annum. However, two things stand out. Firstly, there's the blurring of the whole line, the whole divide, if there is one, between trading and investment. To me, this is less of a line in reality than it is on bank organograms, where completely different parts of the organisation do trading or investment. After all, there's no reason that you can't have any median holding period for a given position or investment. Trading, of course, tending to be focused on short-term holding periods and investment on longer ones. The second key issue, which is what Ivan and chums at Capital.com have spent a lot of time on, is investment and trading education, which fits nicely the above gap. It also covers an important angle in the UK as the cost of financial advice has gone through the roof. As we heard in LFP106 with Dan Kiernan, the usual sod's law has applied to independent financial advice in the UK, by which I mean that an overzealous regulator has improved standards, a good thing in itself, but in the world of interconnection, nothing's independent and nothing is free, and this has led to fees for advice shooting up, so far less people actually take advice. Doh. How can digital fit into this? Is it possible to give good advice, good education, using digital platforms? Is there a difference between trading and investment? Ivan will guide us through this maze. Plenty to talk about, so let's get on with the show. Hi Ivan, thanks for joining me today.
Hi Mike, thanks very much for inviting me on the show.
So I always like to give listeners a feeling for where I am, and when I came into your palatial office here, not far from Victoria, you pulled the curtains closed, and I was starting to get concerned that you'd misunderstood my idea of having an intimate conversation, but it's actually just to improve the acoustics, so you tell me, and the fact that I'm sitting the opposite end of the room has nothing to do with this whatsoever. And also, actually, just to give listeners a bit of a feel, you're an incredibly fit, ripped-looking gentleman, which, of course, makes me sort of rather jealous and rather guilty. You like sort of running and swimming a little bit, or more than a little bit.
Yeah, I like to stay busy, doing a bit of exercise, and occasionally enter a triathlon.
And you enter triathlons abroad?
Yes, yeah, I like to travel. I was in Marbella for a half Ironman in April.
And a half Ironman, remind me, is how many?
So it's 1.2 mile swim and a 56-mile bike ride and a 13-mile run. Which is quite tiring, isn't it? Yeah, it took almost 6 hours.
6 hours?
Yeah.
Actually, talking of brand partners, there was a fantastic thing I saw on my LinkedIn, and normally I don't see fantastic things on LinkedIn. Some chap whose name I forget at Blue Motor Finance was doing something crazy. I mean, it was something crazy, like in the office, the equivalent of, I don't know, half a dozen triathlons in a week or something for charity. A gazillion miles. I've completely forgotten the statistics. So How long does it actually take to get fit in the first place? And then how much time do you have to put into remaining fit enough to do that kind of volume of exercise for the average person?
The important thing for triathlon really is you've got 3 different sports that you need to get to grips with. Cycling and running aren't hugely technique-based, but they take some time to get up to a base level of fitness that you can get through the endurance. And it's about building up endurance. The swimming is a lot more technical, and you find a lot of people come into the sport as very average swimmers, but strong runners or cyclists. And so the swimming is often where people will get some technique lessons to be comfortable getting in the water with hundreds of other people at the same time, and it's pretty chaotic.
Yes, and pretty dangerous. I think you said you did one where someone actually didn't make the end of the swimming, rather tragically.
Yeah, it can be a bit dangerous. But, by and large, any sport can be dangerous to some degree. I think it takes a bit of time. I managed to fit in most of my training and my commute between work and home. And I've got a family life, and so balancing all of that is a challenge. But doing one tough swim a week with other people to provide the motivation and stimulus to push yourself, it's a very effective way of...
And so how long did it take you to get fit enough to do a triathlon from being sort of normally fit, or have you always done triathlons from being a little boy?
So I got into triathlon in 2014, having done a few marathons. So I had a reasonable base fitness there with quite a lot of running.
I've never been massively fit. When I was at college, I did do rowing, and that was, I think, getting on for 6 days a week at 6 o'clock in the morning, which was very early in the morning. And my main recollection of being relatively fit in my terms at the time was that I was always exhausted, actually. I was always tired, but that's probably due to having gone to bed too late and then got up too early and then fitting some lectures in the middle. I mean, presumably there's an art of sort of peaking and tailing and all that kind of stuff. You can't maintain yourself at a super high level of fitness. You have to timetable your triathlons and think, okay, I've got one in 5 months' time, and then you ease off a bit and then work up. Is that how it goes in practice? Yeah,
so I've been on a fairly long journey in terms of how you cope with the volume, because recovery, sleep, nutrition are all extremely important parts of being able to maintain
not beer,
volume.
Which was an important part when I was relatively fit, which I don't think actually helped with hindsight.
Yeah, so I've learned a huge amount about diet and nutrition, and I've moved my eating habits a lot, and actually I've moved towards a much higher fat diet and much lower in particularly refined carbohydrates, which put a lot of pressure on the gut. And fat burns a lot cleaner than carbohydrate, and particularly refined carbohydrate. And so you produce much less toxins, and we all, even elite athletes with very little body fat, have enough fat to go for hours and hours and hours. And when you're doing a long-distance triathlon, it's extremely important to train your fat-burning energy systems, and it's much less about training maximum speed systems. So that's a really big part of it. And then the other part is taking time to do active recovery. And for me, that involved learning about yoga and introducing one yoga session into my weekly routine, which is great for de-stressing, but also great for giving the body active recovery time and building small muscle strength and balance.
Yes, it's so much more integrated now, isn't it? So much more scientific. I mean, when I came to London, the traffic wasn't so great. And late 80s, I lived in Maida Vale. And in the summer, I'd drive up to Hampstead Heath and just run around Hampstead Heath. It didn't take very long to drive there, drive back, so it's a perfectly sensible thing to do. And very pleasant running around. But nobody had told me that it's actually really important to stretch afterwards and all this kind of thing. And just in the same way in the early 80s when I was rowing, things like core strength exercises, but suddenly just at college level, weren't really known about, so you didn't do that. So you tend to sort of mess your back up and all this kind of thing. And I guess in the usual way that people have got to the right answer built on generations of failure and weaknesses, and also the professionalisation of sports. People going for the tiny little bit that gives you the extra 1 second or something like that. Interesting, right. So that's in your spare time. In the day job, you go to work and things like that, and you've done different types of work over time. So what's been the career journey? So having finished my master's degree at Edinburgh, I did a stint at multi-channel digital solutions. Master's degree in?
Advanced Computer Systems Engineering. And did a stint at a consultancy back in 2001, and that was sort of the height of the dot-com bubble bursting. And was an interesting year there, working on multi-channel solutions and lots of innovative stuff. From there, I joined a company in financial services called IG.
Which many people may know better as IG Index.
Yes, which is the main brand that it was under then. And there, immersed myself in capital markets, in the world of trading and investment. Joined as one of their few permanent Java developers. My first project was to launch the online trading platform, and from there I quickly moved into team leading roles and then managerial roles, helping to build the platform and the technology capability to deliver on lots of automation, deliver on lots of new product lines, international expansion, We had a sports business at one point that was fixed odds bets as well as sports spread bets, and divested that business as it wasn't growing nearly as quickly as financial services. So wide variety of projects. Ended up running teams in India and in Eastern Europe with total headcount in the region of 300 within IT development.
Which is quite a sizable business in itself. So you're one of the, I think, relatively rare CEOs of fintechs in that you're a real tech person who came from literally playing with computers and Javas and all that kind of stuff, and ended up going up, as it were, the engineering route into management. I mean, quite often people come into management from sort of strategic consultancy or businessy thing, and there's no rights and wrongs about it. But I guess that, and certainly I found in terms of when I was doing a whole bunch of turnaround projects for big banks and all that kind of stuff, one of the great advantages for me, having started in tech as it's now called, was that having been sort of a poacher myself, it was much easier as a gamekeeper because they couldn't give me any bullshit because I'd used it myself in the past, you know. So it's much easier actually managing very tricky thing like software development. And I say very tricky thing because things like engineering, if you're going to build a bridge over the Thames, it's relatively well known. And even then it doesn't work out that well with the Millennium Bridge, for example, but it's a relatively well known and almost sort of linear business where you've got lots of stuff around it. But software is a right bugger, really. I mean, you know, you could, if you're reporting to me, you can say that you finished the code, and you have, but what does that actually mean? I mean, are there a million bugs in there? There's a one bug or there are 10 bugs, you know, so that must actually be quite useful.
And I look at myself as one of life's learners, and I'm an avid reader, and I like to stay on the forefront of what's happening. And if you look at how we did things, we were doing Agile before it had a name of Agile, and you know, pretty much Scrum before it was called Scrum, with releases every week, and you know, really making sure that what we were building was what our clients wanted. And that's really in the core of what I'm about, and that's about essentially communicating, understanding, empathizing, and ensuring that what you're delivering is what's needed and not necessarily what's asked for. And that's a really complicated part where there aren't that many people who bridge that gap well with enough technical understanding to deliver what is going to be well received, and the ability to negotiate those complicated conversations with stakeholders about observing what they do rather than listening to what they say. And that's where a lot of software projects fail, where someone who's commissioning work will have an understanding of what they think they want, and the way that they ask for it results in something being delivered that doesn't meet their real needs, but it is what they asked for. And I think that's always been my focus, to put myself out there and say, fairly strongly in some cases, you know, I know this is what you're asking for, but I think this is what we need. And being a strong stakeholder in what the solution looks like, in what the opportunity is, and in being able to understand where things are headed, understand customer feedback and needs, work through focus groups and identify what are the core of what is going to be a powerful experience, and how do we put that at the core of what we build and provide. And a lot of that comes from putting a strong stake in the ground, but being humble and being able to say, okay, we got it a bit wrong there, but we're moving in the right direction. Let's take on board new feedback. We've got new information now. Let's move forward from that base. And that, for me, is the most complicated part of software. You don't start off with these concrete plans of this is exactly how tall the building's going to be, and this is exactly the weight it's got to sustain. You end up moving and pivoting and adapting as you learn more information all the time, and that does lead to a lot of complexity.
Yes, absolutely. I mean, it's a very sort of sophisticated topic, and I should do an episode on it sometime, actually, just for a change from the business angle. And it's interesting hearing you talk insofar as, you know, back in the day, the two people I learnt from when I started as a new graduate were both responsible for maintaining an Algol 68 compiler. So I implicitly at that time absorbed the idea that really sort of computing sort of for people who aren't that good at maths and algebra, but you know, they use a computer to do it. And it's almost like an exam. Someone says, okay, here's the rules of Algol. Give me a program that will actually compile that from this into some sort of machine code or assembly language or something like that. And that's certainly one type of it. And that is definitely from the generation where, you know, your computer wasn't connected to anybody else's computer, or if it was with great difficulty, etc., etc. And it's almost like doing a crossword puzzle, which actually one of the reasons I got bored of it, because I could do the crossword puzzles quite well. But once you can do a crossword puzzle quite well, tomorrow's is rather similar. But as you say, actually, how it's evolved in terms of communications and computing coming together, and then actually people's needs in the real world, it's got into a much more nebulous, sophisticated domain where there's a whole bunch of parameters involved in doing something which, well, let's just call it a product in this case, which is producing a good product. I mean, the one thing listening to, just before we go into the course about education, that occurs to me, which is that everything you say is clearly right, and you've got a decade or two experience of it. But how do you fall into that? Henry Ford's comment that if I asked people what they wanted, they'd have told me a faster horse. Or does this come back to you can actually understand their needs or articulate them better than they can? If you go around asking me and others what I want from a trading app, I'll tell you. But maybe, as you say, maybe that's not what I really want. Maybe actually you can do something better than that.
Yeah, and for us it's about how do you convey information that will allow people to feel informed and yet not overwhelmed. And it's about layering in information and experiences where people who are new to your ecosystem, your platform, your set of services can get up to speed with what you offer, how you offer it, and understand it and engage with it, and how you layer in more powerful interactions for more advanced users. And if you look at the best digital platforms, in the world, the apps that we all use in our day-to-day life, they all start with simple, and they all start with what does everyone want from this experience when they're first loading it up, and what is the minimal information that we can portray meaning and value without overcomplicating things. So for us, I recognise in myself that I have less and less time to spend on the detail of lots of things and are increasingly distracted in today's digital world. And so really it's about what is the core information, what are the core experiences that we want to make sure that our platforms and services major on, and how do we do that in such a way that people can take action quickly, that they can achieve their goals quickly, and that they're not labouring unnecessarily through layers of complexity that aren't adding anything to the experience. And this is something that we really focus on, is what is the core essence of trading? What is it that people really value when they're looking at the markets, when they're looking for opportunities, and when they're placing trades and have exposure in the markets?
Yes, that's a very interesting way of looking at it. I mean, at one level it's kind of trivially correct, but at another level, going back to my introduction, that waves of fintech come along and they examine, as it were, the new territory for the first time and put bridges down, and lakes and hills and mountains and roads. Then what happens after that is you tend to add stuff to it. And I was talking to Ricky Knox a few podcasts ago about the fact that the smartphone, which is largely what digital's about perhaps, has only got so many square centimetres or square inches on it. And there's a limit to how much you can bung into that. And Revolut's a good example. Actually, I should download Revolut to see how they're getting on. So Revolut are particularly brilliant at doing 100 things at once and adding a million pieces of functionality. And of course, the answer is user interface design. Well, that's not the answer. That's just the label to the whole field. But it's no simple matter to bung 101 things into some app on my phone. And as you say, make it easy for me to use at the beginning, but actually have the depth behind it. And I'm not sure, actually, just in terms of the ones that I use, whether I've got any app that does anything like that. I mean, one example at the moment, I was mentioning before my research was into the East India Company, which we shan't go into now, in terms of the book on how you manage small code boards. The East India Company, having run half of global trade, the sensible listener will be wondering why I'm looking at that for small code boards, but all shall be revealed. And I got to the stage at 25,000 words, where Word was just like a nightmare, Microsoft Word. Because it's just like 100 pages of A4 text in a line. And have I told this same joke before? Have I mentioned this? How do I move this around? Anyway, so I found what grown-ups do. And there's a program called Scrivener out there, which I'm a complete convert to. And what Scrivener does, it enables you to structure. You can actually basically examine the book at any stage. So, I've got a dozen chapters. And there's like a one-line explanation about what the purpose of each chapter is there. Yeah? And then I can drill into the chapter and see what's within it. And not only that, I can actually keep all my research notes and PDFs on a window on the left and, just basically manipulate a whole bunch of information. The one thing that was holding me back with that, I thought, OK, this looks really good, but do you know what? It's going to take me a week to learn the bloody stuff, and then I'll be trying to change the font size. And OK, there was a little bit of how do I change the font size because I can't read this one over here in footnotes, and how do I change the line? So there's the usual kind of stuff. But having said that, and this is on a computer, so you've got much bigger acreage. Having said that, actually, I was remarkably pleased with Scrivener in that most of the things kind of worked how I assumed they'd work. So the learning curve, it took me about a day or two. And then I was thinking, my God, this is a million times better. So the ROI in terms of how much time I have to spend understanding a new piece of software was really very high. If we take a non-FS, let's just take a non-FS, which app or program do you use that you actually like or admire or think does this well, i.e. condensing a complex world into something that's simple and usable?
Yeah, so the example I often use with people when I'm explaining what I mean here in concrete terms outside of financial services would be something like Google Maps.
Yes, that's a good one. I was thinking I haven't got one, but Google Maps I do like, yeah.
You ask someone, how many features does Google Maps have? And they look at you funny, and then they go 5, and then they go, actually, no, maybe 15. And then they go, I don't really know, but there's a lot. And I just use it to go where I need to go. And it comes back to what's the need that it's satisfying. And that's often what they say, which is really interesting. And, you know, when you launch Google Maps, you have a map, you have a dot of where you are, and you have a search box. And that's it. It's as simple as that. And yet, as soon as you type in a destination, you then get a whole bunch of options about whether you want to go there through a certain means, whether it's walking, whether it's public transport, by car. If you pick public transport, you can say, you know, do you want to arrive there leaving now or arriving there tomorrow at 9 in the morning or so on. And it's about providing that common starting point with what they know is the most useful thing for most people's journeys and most people's engagement, and then allowing you to move from there into much more complexity.
Absolutely, and it's almost like natural language processing of an infinite information domain. So I'll give an example. I had a coffee at Coffee Geek this morning near Victoria. Actually, I found that some time ago, but what I did to find that, I entered into the one search box, coffee near me. And then it gives you a bunch of stuff. I mean, a million Starbucks, that's not coffee, but anyway, gloss over that. And then each of those, so Coffee Geek, you click on it. And then once I'm into Coffee Geek, I see a little pretty picture that looks nice. Yada, yada, yada. Oh, that's a premium coffee place. And then I read reviews. And you're right, actually. I was actually thinking I didn't have any, but you're right. And because it comes over so simply, I didn't actually perceive it as doing a really complicated thing. Okay, so you've set yourself at a high bar, high hurdle now, which is that all the listeners who are going to check you guys out will expect an equally good interface from your capital.com app and platform on the web. But it's good to have a North Star to be aiming towards, an aesthetic, as it were. Otherwise, you can get this thing which is the wrong way around, which is, you know, one of the failures of the agile thing, which is if you don't know what you're bloody building, you build some foundations and you add something on, and it just sort of sprawls like medieval London or something. And 1666, the Great Fire of London. The point being is that at some point in time, in software terms, you need to burn the whole bloody thing to the ground and just start again, because where you started ended up being not the right place. Okay, so this is the context in which you're trying to portray that information, and I think it's really important. It wasn't something been on my mind to talk about, but it's actually a really important start for this, because in terms of investment and trading education, you could, if you were crazy like me, sit down and write a book on investment and trading education, and you write a good one. But the reality is most people don't have time to read many books, and the reality is that in terms of wanting what we want at the point of needing it, maybe many of us will sort of do a quick Wikipedia on something. It's actually much more these days about how well you can deliver something at the point of need, isn't it, really? Rather than you wrote the best book in the world on investment and trading, and it's 550 pages long, and I could buy it from Amazon. So do you want to start with increasing financial awareness or the education?
Yeah, so in looking at the needs of our customers, it's very clear that people come to trading from different degrees of understanding.
And just for the avoidance of doubt, you use the word trading to mean what?
So this is people who want to take a position in the market. They think something is going to happen. They've identified an instrument where they can take advantage of what they think is going to happen, and they can place a trade. And, you know, through our services, you can think something is going to get better over time and go long on a particular market, or you think something's going to go badly over time and go short.
So when you say trading, you're focusing on the verb to trade, in that I buy, for the sake of argument, make a silly example, I buy a banana from a shop. That's a trade. You know, how do I execute a transaction where I hand over money and I get something of value back to me? And in this context, I get something which is a little bit abstract, because it's not a banana, I can't eat it, but it's something whose value will change. So that's how you're seeing trading, rather than, as it were, my sort of more perhaps old school FSE approach, which is that banks have got a trading division and banks have got an investment division. And when you say trading division in that context, you mean you've got a whole bunch of traders who do a trade all the time. The investment people do a sort of a different thing. They take clients' money and, as Woody Allen says, invest it until it's gone. It's clear. It's just me trying to sort of keep track of this sort of investment and trading, because the words tend to be used in different ways by different people. You're enabling people to do a trade. They will basically notionally hand over money and they will get some financial exposure as a result.
Yes, and, you know, if you look at the tail end of last year and what happened in cryptocurrencies and Bitcoin, there was the introduction of futures contracts being listed, and that generated a lot of publicity and a lot of interest, and was the start of some of the bigger financial institutions being able to go long and short through the futures contract on Bitcoin. And suddenly you've got a two-way market there in a very wide audience. And, we saw what that did to the price. We saw what that did to the price in January later. And, it's allowing people to take advantage of opportunities like that. We take a cautious approach and we provide a dedicated app to education. And we see education as a big area of need of our customers. And we've invested a lot of time and energy in understanding how to best present bite-sized chunks of education to guide people through something that's appropriate to their level of understanding. And so our first questions in our dedicated trading education app, it's called InvestMate, is to ask the user whether they think they're a beginner or whether they want to improve their existing knowledge. And through that, we can start them at a suitable starting point. And then it's about defining achievements and goals and giving them a structure in the app where they can consume small amounts of information on a daily basis. They can highlight terms they want to store and refer back to in the future. And they can search glossaries for information that they don't understand. And we currently are getting more than 100 downloads a day of that, purely organic, and the feedback and reviews are amazing, extremely positive. And that means that we are hitting a real user need of a lot of people for more understanding and accessible education in an experience that they enjoy. And we get loads of really positive feedback around the experience and around the effort that we've put in there to create something that is engaging and that is helping increase people's awareness and understanding. And it starts off, if you say I'm a beginner, from almost no knowledge of finance all the way through to much more complicated topics and somewhere in the middle covering the core asset classes and what are the core drivers around each asset class. And so we hope through that to give people a much better understanding in ways in which they want to consume that information.
Excellent. Well, as I was talking about disintermediation for a couple of episodes, taking out the investment manager in the middle, well, the investment managers per se haven't done particularly well, but most of them haven't done terribly badly, and that's because if you join an investment management firm as a new graduate, they won't let you loose on anything until you've actually learnt a bunch of stuff. So the corollary of disintermediating, as it were, investment managers like Nutmeg or Scalable, and just on your phone directly trading in the market, is of course that you do need some base level of education. Otherwise, by disintermediating, you will be saving yourself the fees of the investment manager, but you can be exposing yourself to losing all your money because you don't actually know what's going on. And one of the interesting points that came from Frayed Trade conversation in the previous episode that I hadn't particularly appreciated, but I've seen the other side of it in terms of my kids' friends, which is that the cryptocurrencies have been a bit of a gateway drug to this. And I've mentioned once or twice in the podcast, my elder daughter in second year at UCL doing physics came back and said her mates are putting some of their student debt or student loans or whatever into Bitcoin. And this is when Bitcoin was 18,000, to which my answer is, what could possibly go wrong? Well, if you have that experience when you're an indebted student, aged whatever, 20, 21, then as much as you like doing everything on your phone yourself, it becomes very apparent to you that that you are only 20 and 21 and contrary. I mean, this is, I think when you start growing up, when you're sort of late teenager, 17, 18, 19, you've got this idea that you know everything. And then you gradually, the older you get, when you get to my age, you actually know very little after all. But you realise that actually there's a bunch of important stuff you don't know. And that whilst trading yourself is something you might enjoy, something you might be interested in, you absolutely have got to fill that gap. So that's the basic thing, which starting with students or whoever, they don't know what they're doing, and they've punted around literally in cryptocurrencies and that kind of stuff. And so a beginning person will be taken on a journey with you guys and get the education. As you say, it's a free app anyway, so it's not going to cost them anything. And that generation is definitely tuned into doing it that way. For more sophisticated investors, what kind of education can you tell them, or what kind of stuff have you got to helping them to detect their trading biases?
Yeah, so this is an area that we've invested quite heavily in, and we've built out a platform that analyses our clients' trades and uses some machine learning to understand the ways in which they're trading. And we've got people with deep experience in trading and the psychology of trading. And that's a well-documented area where when you have money in the markets, you need to make sure that you're continuing to take rational decisions and that you don't get emotional about your positions and about how things are going. So we've invested very heavily. We now detect 10 different types of trading bias in people's trading.
What's an example of trading bias? I mean, perennial optimism or pessimism or panicking? Or
we all have a natural human tendency towards loss aversion. When you're investing in the markets, you're also backing your decisions with your money. You're backing your thinking and your rational decision making with your money. So to realise a loss on a trade is also like saying I was wrong. And a lot of us are very bad at saying I was wrong. And so that can result in people riding losses longer than they should do, for instance. And if you have a tendency to move a stop down when you've got an open trade because you don't want to recognise that you were wrong, you're putting more capital at risk than you would otherwise if you took a small loss and preserved your capital for a trade again. And we see in a lot of our clients' trade behaviour that a large number of their trades are successful. And really, that there are some clients who end up losing on some of their trades because of this loss aversion. So for us, that's an area where we want to provide personalised education around some of these different biases that we often are susceptible to. And it's not just in the world of investment and trading. These are biases that we have in everyday life and we have exposure to in other decisions that we make. So for each bias that we detect, we present our user with a piece of information that's been well researched, that is an article of content that's specific to the highest priority bias that they've exhibited in their trading. And that will show up as a push message with a lot of descriptive content that we've had really good feedback on. And we won't badger our users. We're not trying to advise our user. We're making them aware of what they're doing, and we're making them aware of some of the consequences of trading in certain ways. And I think the one that everyone will be very familiar on, which is a type of strategy that you would apply in roulette, to draw the parallel there, would be to put a stake on red and double your stake if you lose. And that's a very sort of basic strategy that one could apply. And we would detect someone trading in that sort of way, where maybe you're chasing a loss with a bigger stake, and that can be quite dangerous. So, again, it's about increasing awareness amongst our audience and providing specific tailored education around those sorts of use cases. So that's an area that we think is something that we're doing something really interesting around.
That's a good example, actually, a very good example of digital. So the first one about taking somebody who's unsophisticated and explaining it to them is kind of like an educational product delivered through a computer screen or through a smartphone screen. It's just sort of kind of content. And this, for more sophisticated, is an interesting use of digital because, of course, you're coming from some knowledge base, but also you're coming from analysing their own data, their own stuff, and helping them as a result in this sort of tailored way, which is a very good delivery of digital. And coming back to the whole interface design thing earlier, I think that is a good example of the kind of the Google Maps-y stuff. So, Google Maps doesn't do this, but I saw there was some study, was it last year, about how people travelled between random pairs of underground stations. I forgot what it was, 40% took the most efficient route in some cases, and 25% took a totally inefficient route and changed too many times. So you could, for example, imagine that, something like Google Maps, by analogy with what you're doing here, would examine your tube. Well, you probably run everywhere or swim everywhere, swim along the Thames. I thought you were looking a bit wet when you arrived, or cycle. But there's no reason that Google Maps couldn't actually sort of include something saying, by the way, Mike, every time you go from, Victoria to King's Cross, you take the Circle line. This is taking you 3 times as much as if you just got the Victoria line. And it's the same kind of thing. And certainly there's something that I did a bit of in the 90s and subsequently with my Stratos business management tool, which is that in terms of traders, the thing that you always hear in banks from traders is that they cut their losses and run their profit. And I heard it say much. One day I thought, bollocks to this, I'm going to find out what they actually do. And in those days of not very sophisticated ITs and all that kind of stuff, over 20 years ago, I had to do it a simple way. And the simple way that I did that was to measure other traders' P&Ls, positions, the downside standard deviation and the upside standard deviation. So the standard deviation everybody knows. If you don't know, it's how wiggly things are. The downside standard deviation is if you take all those ones below the average, what's the standard deviation there? And the upside standard deviation is take all the ones above the average, what's the standard deviation? So if you divide the upper standard deviation by the lower standard deviation, you get a very clear, simple message and barometer of whether people are running their profits and cutting their losses, or the opposite. And it may not surprise you with your knowledge of psychology that, unsurprisingly, almost every trader ever that told me they take their profits and cut their losses didn't. And the evidence was the opposite, for precisely the reasons you say, that actually they ran their losses and cut their profits. But that's just an example of a simple technique like that. Now, it doesn't matter. It doesn't matter if you actually want to run your losses and cut your profits. That's fine. But this kind of information, and I assume your more sophisticated 10 versions, is really useful to me if I'm trading. And look, my motivation in trading, Ivan, is I want to do this. Okay, Mike, by the way, you're not doing it. That's really useful to me. So I can either reassess my aim of trading in this way, or I'll go, oh, shit, then I need to more. It's a bit like these podcasts. Sometimes I listen to them. I have to go back and edit them. I go, oh shit, I spoke all the time. And I kind of fooled myself at the time. I sort of sat there and listened to the guest rather patiently, and then I get this sort of display on my computer which shows lots of sort of squiggles next to the mic, and not the guest. It's immediate feedback. So moving on to me now feeling guilty and shutting up for a change, moving on to the much bigger picture here, do you want to say a little bit about ESMA and the changes to the industry? European Securities Markets Association or something?
Yes, and they sit above the national competent authorities like the FCA in the UK and BaFin in Germany and AMF in France and so on. And in the industry of trading, there are a range of competitors in the market, and some of those competitors have been very much coming from the traditional finance, investing, trading world and are very blue chip in the way that they operate, and some less so. And I think ESMA have recognised that the world of trading and trading with leverage is a world where if retail customers who don't have much knowledge are provided with very large amounts of leverage and are provided with instruments where they're effectively exposed to debt, then you can have some very negative consequences of participating. And, you know, if you look back over what we all call black swan events, the Swiss franc unpegging from the euro being a recent one that's still very much in the minds of a lot of people. You know, there you've got G8 currencies with an artificial peg that, when removed, resulted in a massive move in what was seen to be a stable set of currencies. And that resulted in people with large amounts of leverage being on the hook for large losses. And in some cases, with some brokers, that became a debt that they were liable for. So, you know, ESMA is stepping in, along with, you know, the help of the national competent authorities, including the FCA being very active, in defining some new regulatory framework for businesses like ours to operate within that provide much more consumer protection for retail traders. And at Capital, we're set up from the beginning that everything that we do is very much in line with the way the regulations have gone. We have always provided negative balance protection, which is where a client can't go into debt if they're a retail trader. We have a closeout rule at an account level if you hit 50% margin. We've never done marketing that has included any financial incentives or bonuses of any type, and we think that that is a good measure to bring in to prevent people from being drawn into an industry that has a degree of risk associated with trading the markets. It is not trivial. And so we're very much in favour of the regulations being brought in. We do think the industry of investing and trading is a really positive industry, and it needs to be governed well. And I think the regulations being brought in by ESMA have gone quite far towards reducing leverage available to retail traders. And I think the danger with any regulation is you get consequences that aren't what you intended. And, you know, the danger here, like lots of other industries that have been very heavily regulated, is that people desire the product that they've got available at the moment. And you know, so there is a danger that people will go offshore to try to get that product still, and that presents a danger. I think we're very comfortable with our positioning in the marketplace as someone who is embracing the new regulation, and we think they're really positive changes for the industry. And we have taken a leadership position in the consultation paper, and we've rolled out all our new customers being given the recommended leverage levels that ESMA have put forward in their consultation paper that's due to go live in August. We're conscious of a need to provide a safe product and a safe platform for retail traders. And I think ESMA are doing generally a good job of engaging the industry and putting forward new changes.
Yes, and it's interesting to hear you say that. I mean, as always, and one thing that's generally not focused on in wider coverage, although clearly in terms of the feedback on documents and drafts and all this kind of stuff, it's actually covered at a detailed level in the process. But you've got the aim of regulation. So going back to the IFAs, the aim of the regulation around IFAs was to improve the quality of advice that people in the UK got. That aim was achieved, but at the expense of far fewer people actually taking it because it was then so bloody expensive. So that was just kind of, as it were, short-sighted legislation that wasn't really taking in the bigger picture. So what you're saying on ESMA, and I do think that you guys are well positioned, and in terms of asking around my contacts about you guys, you know, the effort that you're putting into this education and all that kind of stuff says a lot in itself. You know, you don't make money from educating people, basically. It's not a profitable thing, but it is part of being a responsible blue chip fintech in this trading world. So you've got a family, I've got a family. You don't want to go around bankrupting people's kids and all that kind of stuff. That's not the point of it. And ultimately, I think that getting that education thing right will give you solid, longer growth rather than, as it were, just being a sort of the opposite approach, which would be a gambling shop around the corner where people just you take whatever money, they stick it on whatever horse, and what happens. And clearly the secret's going to be how well ESMA does that regulation. Is it going to be another 1.5 million words, which means that it's so burdensome that your free app ends up being a sort of $1,000 app just to pay the ESMA fees, or is that going to be light touch? So we will see. Okay, so it seems a good time to come on to a little bit more about Capital.com and what you're precisely offering, which we haven't touched on yet. You've been very good at sticking to the topic. But before we wrap up the show, I'd like to thank all the listeners out there, whether you're gamblers, traders or investors, and my brand partners for the podcast, Blue Motor Finance, who are, according to the 2018 FT1000, the fastest growing FS business in Europe. Blue's award-winning technology has supported over $1 billion of lending, working with over 3,700 UK motor retailers. Capital.com, making CFD trading more accessible and engaging in 23 languages, 500,000 downloads in 51 countries. Check out Capital.com or download the app. Trading is risky. Smart Pension, who are fast, secure and free. Check out their UK workplace pensions at autoenrolment.co.uk. So before we come to you throwing some breadcrumbs on the water, Ivan, we haven't touched on Capital.com much. I've mentioned you a few times in recent podcasts. So if listeners out there download your app, and maybe you can tell us which listeners out there can download your app in what territory. We've talked about the education one, so they get the education. I understand there's a demo account, so they can just play around and learn stuff without actually having to risk any real money. If they get your app, what kind of products are on it and what kind of markets?
Sure. So we cover all the major global markets across the key asset classes. So foreign exchange, commodities, indices, major equities and cryptocurrencies. And our range of equities is focused mainly on the big US shares, which everyone knows. And then a range of the bigger UK companies. And then we're in the process of rolling out European equities, covering a lot of the major Western European countries. Our app is available in the store. We are across all of Europe in all the different European languages. And our main markets are the UK, Germany and Italy at the moment in terms of where we're getting traction. We're also seeing a lot of traction in Scandinavia. I think you've got quite a sophisticated, financially savvy audience and they really like our experience.
And these are all via CFDs?
Correct.
And in case any listeners don't know what a CFD is, maybe you can explain it simply.
So a CFD is a contract for difference where you're buying at a price that we'll show you and later you're selling at that price. If you're doing a CFD on an equity, you don't own the underlying share. You are buying into the market at the price quoted on that day, which is where the share is pricing. And then you're cashing in on your profit or you're realizing your loss when you go to sell. And like the old adage goes, you want to buy low and sell high.
So if I go and buy BP today, and let's say BP is trading at £10 a share, I buy one share of BP at £10, I then own a share in BP, and I put it in my pocket or my safe, metaphorically speaking, and then I sell it in 5 years' time, and it's worth £20 or it's worth £5. So that's the basic thing. The CFD isn't that, so I give £10 to you, as it were. You can explain this a bit more sophisticated in a minute. And, as it were, you notionally keep a record of, Mike's got one share in BP, as it were. And then I sell it in 5 years' time. Maybe CFDs didn't go that duration. We haven't spoken about duration, but in 6 months' time I sell it, and you just pay me the difference.
Yeah, so that's the way it works. So if you think about the basics of what do we mean by leverage, because that's the important part of a CFD. So keeping the numbers really simple on that example that you gave, Mike, if we can keep them really simple. So if you've got £10 that you want to invest in a BP share, if we're providing you with 10-to-1 leverage on BP shares, then that £10 that you put in would actually buy you £100 worth of BP shares. And we're then providing you with £90 worth of funding for your purchase of exposure to a larger amount of BP shares. And so we charge you a very small funding fee, which gets charged overnight. And that depends on the amount of funding that you've taken on for your CFD trade. And then your profits or losses have that multiplier on them. So if the price of BP doubles, then you will make a many times return on your money. And, if you equate that to the housing market, we all go to the bank to get a mortgage. And we all know that if your price of your house goes up by 50%, your equity grows a lot more than that 50%. And in the meantime, you've paid the bank money on the financing. So it's a very similar structure to that. And because of that leverage, the impact on your value of your holding can change significantly.
And so with CFDs then, which presumably came about, they've kind of been around so long I can't actually remember, but maybe 20 odd years ago or something like that, they presumably came around pretty simultaneously with hedge funds who wanted increased exposure to markets. What is the range of leverages that you would do, and what is the range of maturities, if maturity is the length of contract, as it were, if that makes sense?
So for us, we are providing clients with a range of different leverage depending on the product. And our recommended leverage levels are, as I said earlier, are in line with ESMA's recommended leverage levels. And so for currencies, it's 30 times leverage, and for other instruments, it's between 2 and 30. And ESMA have defined where they think those leverage levels should be across the different asset classes, and we're making those our recommended settings for all clients that sign up.
And what does maturity mean? Can I do my BP thing, get, for the sake of argument, 10 times the exposure? I'll put my £10 in, I get £100 worth of exposure to BP, but I pay the overnight fee on the funding to you. And can I, as it were, just hold it for 10 years?
So you can hold it for as long as you like.
Right.
Yeah.
And my credit risk is on Capita.com?
Yeah, so we are the counterparty to the trade, and we take on some market risk, but not a huge amount. And we've set ourselves internal risk limits, and when we exceed those limits, we'll hedge our exposure with other counterparties.
Okay, so which is one reason why you need much more capital, like you guys have got, compared to freetrade.com, who are just an execution-only stockbroker, where, as it were, the money passes through and the BP share comes out your phone or in your email or whatever it does, because there is the exposure there, as you say, it's regulated. And so these kind of high-leverage products are obviously something which are more appropriate. I was about to say to me, but I'm not very sophisticated. It is less appropriate to my mother, shall we say, and more appropriate to people that have got some background in trading. And again, thinking about it, CFDs and the people I know that do CFDs, they are kind of more people that came from the sort of trading than from sort of fund management. Fund management people being sort of too boring and unsexy, apart from the hedge fund people. So what's the sort of profile of your typical user at the moment? Did you get any sort of demographics in terms of their background? I mean, are they people on building sites, or are they sort of people at Goldman Sachs? You're probably not allowed to do it anymore if you work for a bank.
Yeah, so I mean, you do see a wide variety, and we see a lot of people who are business owners, we see people who are CFOs, we see people who generally, there's a high correlation between people who take a lot of decisions in their day-to-day life and their profession and a desire to trade. And for some people, this is a challenge they really enjoy. And, it's an intellectual challenge. It's making the news relevant to the positions that they take in the market. And so you see people who are in highly skilled professions also participating, where, lawyers, doctors, people of that sort of professional background like to participate too.
It's interesting. We'll come back to where we started. One of the reasons I left being in software was that those days it was a bit like a crossword puzzle or sort of mathematical thing. You could solve it, so you can do it next day. And one of the things I enjoyed most about joining Investment Management in 85 was that suddenly the entire world becomes relevant in terms of reading all the newspapers. Is Merkel going to get the push because of the sort of the immigration thing and da-da-da-da-da? Well, everything becomes relevant. So actually, to do your day job, you need to know about everything, and then you need to filter everything. And that was much more sort of stimulating than just the sort of the finite world. So yes, I can see that. So in terms of Capital.com then, and throwing some breadcrumbs on the waters to listeners, I think I mentioned the relevant things already, which is that it outlined the education thing, which seems extremely useful to me and very important if you're doing this sort of higher risk leveraging. You've mentioned the demo account, which again is really super useful. You don't even have to put your £10 in. You can sort of start with 10 virtual pounds. You're downloadable as an app. Your education app is separate. You've got a platform. What else do you wish to throw into the waters?
Yeah, so we're continuing to invest very heavily in lots of areas of our product line. We've got a new web platform coming that we're really excited about. We've been working on for more than 6 months, and that's currently in a closed beta. It's going to go into open beta next week. We are now doing a Facebook Live event every week that has our chief market strategist providing updates on the key markets. So you can follow our Facebook page and get involved in participating in those Facebook Live updates. And then, we'd love to have your feedback. If you download the app and there's something you don't like, I read all the feedback that comes in from customers, and we're very responsive. We've got an amazing collection of talent working at the organisation, and we're continuing to hire great people.
And how many people are you in total now?
So we're now up to 125 people and continuing to grow and continuing to invest.
Which is quite a substantial size of organisation, which as always shows how, in terms of how hard can it be, generally harder than you think, but that's a lot of people to do it. And just wrapping up in terms of the overall mission, what is your overall mission, Ivan? I mean, obviously one day in the middle of the night or in the morning you woke up and thought, do you know what, I'm going to go and do something a bit different. Why did you think of that? What's your rosy scenario for N years' time if you've achieved what you're trying to do? What are you trying to achieve here?
Yeah, so I mean, we've defined our mission to go beyond just the world of trading, and that is to make the world of finance more accessible, engaging and useful. And our vision is to build the best trading platform. That's our sort of, I guess, shorter term goal that we want to aim for. And I say shorter term, I mean, that's no mean feat to declare that you want to build the best trading platform, but that's what we're aiming for right now. But we do want to go beyond just CFDs in the future, and we're excited about some of the plans that we've got that I can't share with you today, but to help us fulfill that wider mission.
Yes, and I think one of the things we didn't touch on, going back to the origin of CFDs and things like that, is that if you're going to have, let's call it high-frequency activities in the market as opposed to low-frequency, as opposed to me for my sort of notional pension buying some LNG tracker fund 20 years ago and still owning the same thing, if you're going to have high-frequency activities in the market, then it's really scrupulously important to get the cost of trading very low. Because, for the sake of argument, if you do a dozen trades a day or something, 5 days a week, 50 weeks a year, that's going to add up to a lot of transaction fees. So one of the reasons for going down the route that you guys do with the CFD is that it can be a very kind of efficient from a fee perspective or from a spread perspective way to get market exposure.
Yeah, absolutely. And, it depends on the duration of the trade that you're taking. But if you believe in the timing of where you think something's going to move, then it can be an extremely efficient way of taking advantage of market opportunities. It's not for everyone. And I think, the audience of people that want to trade is smaller than the audience of people who want passive investments. But it's a very interesting area, and we're delighted to be offering what I think is already a great platform and experience for customers, and one we'll continue to invest in.
Absolutely. So thank you for that, Ivan. It's a pretty big vision you've got there, and I'm certainly impressed myself with the depth of background you've got in this area. It's a theme I come across more and more in the last year or so on the podcast, which is that people who are getting into this, whatever they're doing, and people who are doing a variety of very interesting things in FS digitally, is the people who are starting to do stuff now are the people who are coming from the incumbents and who've got over a decade of experience doing this kind of stuff already, but just feel that the challenge and the rate of change of the new world means that it's much easier to get something done in a small organisation than in an existing one. So it's an exciting time, and as I say, there's lots of opportunities out there, and I wish you every success in the future.
Thanks very much, Mike.
Thanks for listening. If you have consulting, advisory/non-exec or media needs in the FS or fintech space, get in touch with me at mike@londonfintechpodcast.com.
We could sit in a bender all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moon ride, watching a happy moon ride. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, with the faces so grey, with the pain of the everyday. We are wild like the mountains and the trees. Can you see what I mean? Can you see what I mean? We fit in between the earth and the sky. Kiss the city goodbye, wave the city goodbye. city goodbye. Wave the city goodbye. Watch the firelight dance with me. 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 Watch the firelight